Let's talk about head and shoulders. The head and shoulders pattern, or inverted head and shoulders pattern, is typically a reversal pattern. I'm typically a reversal trader that gets into the trend early as well. So head and shoulders, more or less, is just up, down, right? That'd be your shoulder. This is your head. And then this is going to be another shoulder. Right? Pretty simple concept to understand. So this is the head. Shoulder. And shoulder. One of the most important things about the head and shoulder pattern is I try to find it at key levels, because that's where the market's more than likely going to turn around. So I love my weekly key levels. That's what I typically use. The other important thing is that these shoulders are closed below this head. So the market will typically be in like an uptrend, and then as it gets to the top here, it'll start turning around. Price starts to come back up, but can't make a new high. That's for your first signal that there's going to be a turnaround. So as we do this here, let's just base this off price where it is. I'll look for my weekly key levels. I'll mark them up. Then I'll drop down to my 4-hour chart that I like. So my key level is here. This is my weekly key level. This is my other weekly key level. And then we'll just wait for price here. We'll play price and we'll see what happens once it gets to these levels. So you can see price here is in an uptrend. It's making its way to the top. Now we want to see how price is reacting once it gets to this area. Okay, so we can see now we got to wait and see if another shoulder forms, which it did. Okay, so you can see here, shoulder, head, shoulder. Shoulder. And shoulder. Okay, so that's your first indicator that, okay, this could possibly turn around here. So the next step is to wait for a break of the neckline, which this did. So I like to draw them based off the most touches. And that's going to give me kind of an idea once it breaks, and wait for a retest of this area. That's where I'm going to start looking to enter my trade. However, that's not exactly all I do. As price is coming down, I start to follow it. I'll always follow price as it comes down or up, depending on what you're doing. Now there is just a quick heads up, there is a head and shoulders tool. I don't typically use it because it gets confusing for people, so I don't really even show it, because if it doesn't necessarily line up green, people can get they think it's an invalid head and shoulders pattern, which it's not. Like, this lines up fine, whatever, but sometimes it won't, and then they'll think, oh, it's invalid. That's not true. As long as you have a rough kind of head and shoulders here, that's fine, and you've got your neckline, right? So let's see where price ends up here. Okay, so I came close to the 61.8. One thing I forgot to mention here is I'll always put an area. An area. Everything in trading is an area. It's not specific. It's not necessarily just like a specific line that price is going to bounce from. So I give myself an area, which that reached into. Let's play it. Okay, so you can see how it reacted, right? Down it comes to this next level. So this is what I was saying about a reversal, right? It'll typically bounce off these weekly. It's going to do one of two things when it gets to these levels. It's going to bounce off of it and come back down to your next area, or it's going to break through it. In that point, you would draw another weekly trend line, or not trend line, but key level. So this one you can see here, right? This candle here would be your entry. This green one, at the close of this green 4-hour candle, your entry is on this red one. So next bar market, this is this red candle. That would have been your entry on the head and shoulders, right? It retested the area, the neckline. It bounced by the 61.8 area. So let's see what happens when it gets to the next weekly level here. Price is coming down, price is coming down. Now it's reacting. Price is reacting. Let's see what happens. False break. Let's talk about that. This here, false break. You'll see these big candles through, then it breaks back up. This is why candle close is important. Don't wait for it to tap this and then think, oh, I reached that level, I'll sell. Wait for the candle to close, right? It broke back through again. Let's keep watching. Okay, so what do we have here? An inverted head and shoulders. Yeah. Yeah. Inverted head and shoulders. Here it comes. Here's the fail. Okay, so what do we have? Shoulder, head, shoulder. You can see right here. This is the head. This is the shoulder. Oops. Shoulder. And shoulder. All right, neckline, neckline, where's my neckline? So there's my rough neckline. Let's see what happens here. Okay, there's the break. Let's start following. From the shoulder, let's follow. Okay, follow, keep following. There's my low. So as it's coming back, now I know my expectation. Here's my area. This is my area. Let's see how it plays out. Okay, so this is it here, right? So this came down into my area, this big red candle, closed around the 61.8. There's my neckline. So this green candle would have been my my entry. This could have even come down a bit more. Oops. Your neckline could have come down a bit more, most touches. This comes up a bit more. There we go. Let's see where it goes. And there you go. So there you go. There's two head and shoulders patterns. You can see here both shoulders close below the low Same deal over here. Both shoulders closed below. You don't want it to create a new low or a new high, because that would signify that it's going to continue in an uptrend or a downtrend. That's about all I've got for the head and shoulders. Thanks.